Hi, I'm Spencer Montgomery, and this is not financial advice. Today in the markets, we're going to begin to discuss why I'm expecting a melt up in the markets. A lot of you might not know what a melt up is. It's basically the opposite of a market crash. People talk about a market crash all the time where the market falls really quickly. Typically, a market kind of stair steps its way up and then falls quickly down. My prediction is that we have been stair stepping down over the last 2 years, and we're about to see a really big crash upwards instead. A big reason has to do with interest rates. So today I want to start with the federal funds. This is the interest rate that the Federal Reserve controls. And all other interest rates are based off of these interest rates by the Federal Reserve. So if you look at this chart, this is the Fed funds rate. Right now it's at 5.33. If we look at the general trend since 1981, we've been on a general decline. We've had lower highs and lower lows. What that has meant is that we have been in a bull market ever since 1981. So that's 42 years of being in a general bull market. And I can prove that to you by looking at the stock market. So let's pull that up. So now we have the S&P 500. And if we zoom all the way back, let's put a marker at 1981. You can see that basically since 1981, we've been in a huge bull market. We've had recessions, periods of time where the markets retrace, they go down for a short amount of time. I'm talking that the bull market that's lasted for 42 years might be coming to an end, but I don't want to get there. We'll talk about that at another time. But what happens at the end of any bull market is that you get a really last hurrah, last celebration that really causes the price to skyrocket. Good examples are Bitcoin in 2017, as well as Bitcoin in 2021. I can show you those right here. If we zoom in, you can see that Bitcoin really did this. Basically, it was a melt up in price from October through December. The price went from 4,200 all the way up to almost 20,000. That's a 5x increase. Nobody would have ever expected, but that was a culmination of the bull market that had lasted for the previous 4 years. And something again similar happened in 2021. And so what I'm saying is that we're coming to the end of a 42-year bull market due to interest rates having a general trend downward, and that's going to cause the stock market, the S&P 500, the NASDAQ, and the crypto markets to really kind of melt up in the next 4 to 6 months. That tops out, I'm guessing, either the end of Q1 2024 or sometime in Q2 of 2024. So let me tell you kind of what's going on to prepare for that momentous next 4 months. So another thing we're going to look at, let's zoom out to the 1 week chart. We want to look at some of the things that are confirming that we could see a melt up. One is the US dollar index. We've talked about the US dollar a bunch, and we're seeing, we had a big black candle, which means that the price fell 2 weeks ago, and we got another one this week. And so that we're seeing the US dollar index really giving away a lot of its gains, and that's allowing people and giving people confidence to then go and buy the S&P, the NASDAQ, and crypto. So if I was looking at investing, the thing that I look to decide is it better to have my money in cash, or is it better to have my money in riskier assets like the stock market, like crypto? And when the dollar is going down, it's better to be in other assets, including real estate. But so I would say this is the time. I don't know for how long, but right now is a good time to be invested in the stock market and in the crypto markets. Now, let's go back and look at the other interest rates, like the 10-year, the 2-year, the 30-year. Every loan has a duration, right? It's, for a mortgage, it's 30 years. For small businesses, it's like 10 years. And every duration has a certain rate to that term length, right? Like if you have a longer loan, you typically have a lower interest rate than if you have just a 2-year loan. So let's look at the 10-year. That's kind of like the standard, the middle ground. And we're seeing the last 4 weeks have been really significantly down. And so that trend is also going to help alleviate and cause the other markets to rise. So the US, the 2-year, we're also seeing a decrease, as well as in the 30-year. So between interest rates and the US dollar index, there is a green light for investing in the stock market, in crypto assets, and really all other assets besides the US dollar. So those are our signposts. Now we'll look at the S&P, we'll look at the NASDAQ, and then we'll look at Bitcoin. All right, let's look at, wow. I haven't looked at this chart in a couple days, and you'll notice that the last 3 weeks, the S&P has been on a tear. Let's see how much it's increased. Monday, the October 23rd, to today, the market is up 9%. That's like 20 days. The market is up 10%. Usually, a good year in the stock market is when the market goes up by 6 or 7% for the entire year. And in 2 weeks, maybe over 3 weeks, the market's up 10%. So this is a sign that we could be like, this is unprecedented, and it has the makings of a melt up that continue to go another 20, 30% higher. I mentioned in the beginning how we've seen kind of a stair step in price downward. We haven't had like a big market crash. It's just been kind of slowly declining. And you can see the evidence of that since we look at the market topping out in January of 2022, we've had these stair step downwards. It kind of came back up, and now it's stair stepping down again. And so that's just not a typical way that the market falls. So if it's not a typical way for the market to fall, we could expect the market to do something unexpected on the way up, which would be a melt up. Another thing that we want to look at here is that we had this downward trend that started in July of this year. So for about 3 months, from July, August, September, October, almost 4 months, we had this decline. And last week we broke above that. And this week we got a confirmation of a continuation of a new trend going up. So when we look to see, we really want to see now a new high, right? And that high would be to get above 45.82. We're right now at nearly 4,500. So we need to get the price really only 1 or 2% higher to break the high that was reached in July. So let's look at here a little bit. We've got a couple trends that we want to highlight. We have an upward trend that has been in place since October of last year. So since October, we've kind of been slowly grinding up. But when we look at a little bit longer, down to January of 2022, we're slightly declining. And so we're getting closer and closer to be like, is the price, is it going to break that downtrend that's been in place since January of 2022, or are we going to break below the upward trend that's been in place since October of 2022? And so my prediction is that we break above the downward trend, and that gives us a new high, and it gives us eventually to new all-time highs, meaning that's the highest price that the market has ever been, which is going to then cause people to then pile a bunch of money because they're like, a new bull market's here. There's a lot of money on the sidelines, meaning that there's money in their bank accounts that's not doing anything besides just sitting in their bank. And they're going to pile that in because they don't want to miss out, right? Fear of missing out. And that's just going to cause this melt up. Now let's look at other markets to see if we get confirmation in the NASDAQ. We've seen something very similar, right? The NASDAQ, if we look at what the price has done since Monday, the 23rd of October to today, is up 11.5%. That's wild. So again, this has the markings of being really a strong run for the next 4 to 6 months. So this is not financial advice, but if I'm thinking about strategies, I'm probably wanting to put my more money in the NASDAQ than in the S&P because I'm willing to take more of a risk, right? S&P is a little bit more stable. It doesn't fall quite as much in a bear market, but it also doesn't run up as much. Whereas the NASDAQ is technology stocks, and those, when technology stocks are running, they're really going to run faster than the S&P. So what can we expect out of these two charts? I personally am targeting the NASDAQ, which is at 15,800 to get close to 19,000. That's another 30% increase from where it's at today. Again, I told you that a typical year in the stock market is an increase of about, 8 to 12%. So I'm expecting a 30% increase in the next 4 to 6 months. As with the S&P, I mentioned it's at 4,500. I think it could get all the way up to 6,000. Again, another 33% increase. These are things that never happen. And I shouldn't say never happen. These are things that are rarely happening. So that is the background of the market that we can then look at Bitcoin. Bitcoin is really not a hedge yet. The Bitcoin is a little bit correlated still to the traditional markets, to the NASDAQ especially. People see it almost as a tech stock. So let's look at what Bitcoin is doing. Bitcoin has been running since the 16th of October. That's got 5 weeks where the market has really been taking off for Bitcoin. We don't expect Bitcoin to move in a straight line. So this last week we've gotten a little bit of a pullback, but this is a very healthy move. It retraced back to a level of support, which was right at about 34,700. And now it looks like we're continuing on. We're back up to above 36,000. And the next target I'm expecting for Bitcoin is somewhere between 42 and 45,000. That happens within the next month. And if I'm thinking, if the stock market, NASDAQ are going to increase by 30% over the next 6 months, what does that mean for Bitcoin? To be honest, I think Bitcoin has a real potential to double in that time period. So that we could expect Bitcoin to reach even $80,000 by March or April of next year. So what does my portfolio look like? A lot of my portfolio has a lot of Bitcoin and other cryptos in it. Again, not financial advice, but I'm just sharing what I'm doing with my portfolio. Now, the last thing that you might be interested in is, what about altcoins? People know that Bitcoin is kind of the tried and true. It's the king, but people can't help themselves but try to gamble on altcoins. Now, the way that I determine if it is a good opportunity to start dabbling in altcoins is to see if Ethereum is going to outperform Bitcoin, right? If we look at the chart from BTC to ETH, we want to see ETH start going up faster than Bitcoin. So if we look at that chart, and what we'll notice is we have been in a downward trend since September of 2022. That means you want to stay away from altcoins. Altcoins have performed horribly, including Ethereum. If we want confirmation that it is a good time to be buying altcoins, we want to see the price going up. And what happened in the last 3 weeks is we've gotten a really strong, basically bottoming structure that shows that this might be the turning point where Ethereum and other altcoins are going to perform better than Bitcoin. Now, I've kind of walked us through the S&P, then the NASDAQ, then Bitcoin, and now altcoins. And I kind of went from least risky to most risky. So I do have some altcoins in my portfolio. I don't personally recommend having them to be, a large portion, definitely. But, it doesn't harm anybody to have maybe 1 or 2% of your assets that you are, taking those risks. So all in all, the next 4 to 6 months are they have the potential to be wildly exciting. Not to mention, for crypto especially, you have the potential for a Bitcoin ETF to get approved. And not just one, but we're talking like 5, 6, 7, even 8 different Bitcoin ETFs. Then there's the Bitcoin halving that's happening in April. So there's a lot of events that are culminating around this potential for a really big and exciting run. So that's all I have for today. I hope you found it interesting, and we'll see you next time.